The first half of another tumultuous year came to an end last week. As the new half begins, we're welcoming a new voice to the market outlook rotation in the form of Nico Asset Management. Nico's head of equities, Stu Williams, joins me now to share his insights. Hi, Stu.
Hi, how are you?
Good, thank you. So, we've seen the end of another quarter of another half, challenging conditions in the market. What has been driving market conditions just over the past week or two?
Yeah, I think the main thing the market has been worried about and focusing on is what's happening with inflation reads around the world, and in response to that, what's going to happen or what is happening with interest rates in response to that. So what sort of information are the reserve banks, central banks getting, and what are they making of it, and what's the parts that they're focusing on?
Okay, and so in terms of fund managers reaching the end of the half, how are they going to be feeling at this point in the year?
Yeah, I mean, fund managers like our investors will be feeling it because markets have been pretty weak. So I think in the quarter you've seen markets down sort of between 10 and 14 or 15%. So the New Zealand market's down about 13.5% for the quarter. So hopefully fund managers have added a bit of value, which we have done, but that's cold comfort for us and for our investors swimming against such a strong and negative tide.
You mentioned earlier some tax loss selling, particularly in Australia. Tell me about that.
Yeah, it's an interesting phenomenon for Australia because they have a capital gains tax regime, unlike ourselves. When you're losing money as a fund manager, you actually often sell your position into the tax year end so that you actually get basically the cash benefit of crystallising a loss. It's a bizarre concept when you think about it, because everyone else in the world and they themselves do think about just normal mark-to-market gains and losses, and that's how they're priced. But that's a phenomenon for the Australians to contemplate.
Okay, in terms of, I suppose, the comment, as you mentioned, around reserve banks and central banks globally, that battle against inflation, what do you make of recent comments by the Fed and the ECB?
Yeah, I think the main one would be the Fed, and basically they're taking the path of least regret, which is they want to crush inflation, and that's a really emotive and sort of powerful word that we should worry about. So the consequences of crushing inflation could be quite dire in terms of the potential for a recession. And all the things that go along with that. So that's as most informed or informative reserve bank in the world, we need to be really quite focused on that.
How was that crushing of inflation out of the US? I mean, obviously we are ahead of the curve here in New Zealand as well.
Yeah.
But how's it really coming down in terms of equity markets here in New Zealand at the moment?
Yeah. So the markets really hang on people like Jerome Powell's comments, and so you see immediate response and volatility around that. So you can see a lead immediately from what they're saying. So some people will interpret it as a commitment to do away with inflation and that we'll get there sooner, and markets can rally. Others will worry more that there's a lot of work to be done, and rates still need to move notably higher in the US, and therefore will be negative about it. So a lot of volatility is because everyone has a different view.
What do you think are some of the biggest issues that are affecting New Zealand's productivity at the moment?
Yeah, the number one issue just has to be people. So getting staff, every business that we talk to is struggling to get people, and that's going to be really difficult to fix, because although the government's is probably making the right sounds, it's just happening really too slowly. And cash flow is every day in all sorts of businesses, but it needs staff. Don't just get to New Zealand just like that. So it's going to be a big old issue.
And I suppose last week we saw, at the end of last week, the new health authority agency, I'm not sure exactly what they're calling it.
Health NZ.
Health NZ, thank you.
Yep.
Established. Obviously, it's a long path to go down to create change there. Do you think the employment in that area, perhaps wages, and productivity could benefit from that change?
Yeah, I think the starting position is that obviously the health system's incredibly stressed, and actually COVID's only part of that just now. I think that the health system probably does need addressing, but the timing of it on the back of everyone basically being exhausted by COVID is poor. And I think that the sort of I guess the way the health system operates as an organism is quite strange. So, district health boards have been poaching staff from like primary care providers and listed operators, for example, and paying over the odds, which doesn't really help those operators who are equally part of the system. So there's a lot of strange stuff going on, and it's not particularly coordinated, and I'd say it's probably not fair either.
Okay, well, looking at the week ahead, the Reserve Bank of Australia has its latest interest rate decision out on Tuesday. What are you expecting there?
Well, I think they'll clearly need to increase rates. So I think they'll go up by 50 basis points. I think that gets them to 1.35 or something like that. The commentary around it will be really important. And if you went back in time and wondered about the Reserve Bank of Australia, they were saying they didn't need to raise rates. And the question that most people are asking is, why is Australia any different to anywhere else? Yeah, okay, a different combination of resources, but equally, what's been proven is that they are no different in terms of the global system, and they have the same or similar inflation issues that the rest of the world has.
Mm-hmm.
So it'll really be just the commentary that goes alongside it, and any guidance they give about perhaps the next rate rise after this one.
Yeah, and any of that all-important terminology that comes out. So what other events are you looking at this week?
It's a bit of a low news time, so things that could come out which we're interested in is, so in the background there's been the nurses organisation pay equity settlement, which was initially rejected and was being talked about going to arbitration, so that could come at any point, and that's important because it has really wide implications for potentially teachers, and you've already seen firefighters talking in the last week or so, and other public servants along the same lines.
Mm-hmm. So what relevance does that, obviously huge swathes of workforce within New Zealand, what relevance does that have for markets in general?
Yeah, I guess the big thing that we're thinking about other than people is inflation and who has pricing power and who doesn't have pricing power. So inflation running through the economy is will stress some organisations and mean that they'll be making less money, and I guess they have to balance to what degree they're going to exercise, if they do have pricing power, that power to retain or hold on to margins, or whether they need to balance it up. So it's clearly important that they pay their staff correctly, but they just need to balance out the other stakeholders' interests at the same time.
Okay, and a couple of other points in the calendar this week, US PMI figures and the NZIER Business Confidence Survey.
Yeah, so every reason to be reasonably pessimistic about that, and I think confidence generally in the US and confidence generally in New Zealand is weak, and that usually is quite foreboding in terms of what it might mean, and that's why people are discussing and using the R word, recession, and I think that's a very likely outcome from the combination of all the things that we see.
Okay, well, it'll be interesting to see how the rest of the year goes, and we welcome you to the Market Outlook family. Thanks for joining us.
Thank you. Thanks for having me.